Hey guys, thank you for joining. So let me know in the trading room if you're not able to hear me so that I can fix that. Oh shit, let me make sure. Oh, great. Okay. Alright, so we're just going to go over support and resistance, which is extremely vital if you're not using charting tools like finding support and resistance levels. Then you're just limiting yourself. It's a good place to start if you aren't familiarizing yourself with technical analysis or charting in general. So often the first question, or a frequent question I get asked when regarding finding support and resistance levels, is which time frame to use. And generally I'm going to say you want to use multiple, but good baseline is to use the 1 year 1 day chart, referred to as the daily chart. This is going to give you a good overall picture of the daily movement of the stock. It also gives you an idea of volume, which is another thing to factor into technical analysis. We won't get into it too much, but you do want to consider that these candles represent buyers and sellers. Okay, so these are traders, and this is the volume, how many shares are being traded during the aggregation period, which is changes for the chart. So you can see what I have here as my favorites. If I'm scalping, I'm looking on a really close chart like the 1 minute, the 3 minute, where I'm finding my levels there. But if I'm looking at swing positions, I'm going to be looking at 2-month chart for a close view, maybe the 20-day hourly. That's a pretty common one, and you can see how much of a difference each of these is going to make. 90-day, I like this one, but honestly the most common I'm using are 6-month and daily chart. Okay, so that's that, and each of these candles represent this. It's called an aggregation period, how long it takes for a candle to form. Okay, and the next question I get asked pretty frequently is if I'm drawing my levels through the wicks or if I'm drawing them through the bodies. I'm drawing my levels through the bodies for the most part, and the reason I do that is because I'm trying to get these levels to where the most density is, where the most accumulation is, where the most key points are, and that's going to be where the most volume is. That's where the bodies are formed, not where the wicks are formed, because those are the short time frames. There's not as much volume in the wicks. Alright, so I'll just go through one example here with Casper. So another thing I like to consider is that people really like these 25-cent increments. So if I can get close to a 25-cent increment on my level, that's what I'll put it at, 50 cents or 25 cents. Just to make this quicker, save that as a default. Yeah. So another thing you need to consider is that support and resistance are interchangeable. So once something breaks a support level, that's going to become resistance. Okay, and vice versa. Once you break a resistance level and it holds, that's going to become your support level. So another reason why you want to get these levels where the most volume is accumulated, and at like for a support level, you want to get the lowest point, because once that breaks, that's going to be your most key spot for resistance, if that makes sense. Sorry if I sound like I'm talking out of my ass, but yeah. Okay, so right here, this is kind of where I'm seeing a nice key support level, and then underneath there, let's start with the resistance. So it's trying to hold this level, and then you'll probably get some psychological support just at the $6 level anyways. So it's going to be bouncing between these, but this isn't like just kind of a range here. And then next spot you're gonna see some accumulation is kind of this $5.50 mark. So that gives you an idea. You know, if it holds $6 here, you could bounce up back above this key spot and start to see a reversal. And if it slips under $6, then you're probably going to see it test this next spot. And I'm seeing that through. Just these bodies, I'm crossing it through kind of a key resistance point. So once it broke through here, it bounced from this spot. And so that's why. So it's resistance becoming support, and that's where it's going to factor in the future. So there's one example, and I'm going to hop in the chat here to see if you guys can hear me at all. Oh, shit. Oh, wow. Okay. I didn't realize it was capped. It's not capped. Interesting.
Is the stream Blehme is the stream that is capped, not the voice thing. So
Oh,
they
okay.
can join, they can hear you, but they cannot watch your stream.
Oh, that sucks. That's brutal.
Oh
Really.
yeah. Oh yeah.
Okay, well, yeah, I'm recording it on OBS, so I'm going to be posting it later.
Yeah. Sorry guys.
Wow.
We didn't know that Discord did that. If
That's brutal.
someone knows how to fix that, let us know.
I wonder if I should just start over on YouTube, but that's a whole nother thing. So why don't you guys who can't watch it right now, just, you know, enjoy your night, and there's going to be a recording, so don't worry about it. I'm just going to continue on here. All right. So just whoever is watching, if you guys have any questions, just ask me right now and I can address it in the stream once I go back to the charting. Okay. All right. Thanks, Suburban Dreidel Wizard. All right, so I'm going to get back into it then. So this is what it looks like on the daily chart for Casper. So let's open up a different chart and see how that looks and how the price action reacts on a smaller time frame, or at least how it looks on a smaller time frame. Okay, so you can see what I'm talking about here, where it's trying to hold $6 just because $6 is a psychological support number as a round, you know, even number. Okay, and then you can see here it bounced from the level, and once it held 650, it was able to move up higher. Okay, so I didn't even bother to put in a top level because I'm not really concerned about that unless it can break through these key points. So this is what you want to start off with is your support and resistance levels, because once you get them on all your time frames lining up correctly, you can it holds up, and it just helps you intraday. You can have the key spots, and Casper is not what you want to scalp, but if you look at my SPY chart, you can draw really key spots just by zooming in and seeing where the candles are accumulating. Okay, so it's useful for all sorts of things, but let's just, oh my goodness. Okay. I don't know if I've charted this. Okay. So it's going to be really different when you're charting like a mid cap versus a penny stock. So I'm going to open up a penny stock just for the sake of it. Holy shit, that probably wasn't a good one. Great. Okay, so I'm looking at the IDEX chart here. The daily with these really strong movements, you're not really going to get a great idea of where your support and resistance levels are. So you're going to want to close this down a little bit. I mean, you definitely see your key levels right on the daily. You're going to see your $1.50 level right here, or you could even say your 125 master support, right? So wherever you're seeing key levels, the daily is really good, but if you're looking for anything more than that, you're going to have to go down to a shorter time frame. And here's a perfect example why you could even use like a 5-day chart, so, or a 10-day chart. Okay. All right, so let's see. So right here, it's got a dollar baseline. We know that's really strong, and it's just a key psychological level. So immediately, I'm putting a dollar support there. Once it broke through this 125 level, that's when it got more volume and momentum in general. So that seems like it's a key breakout spot, and that's also where it's going to end up holding as a pretty key support spot if anything above it were to break. Okay, and again, like I'm trying to look at key points of resistance that turn into support once they're broken, and I'm getting that through the drawing it through the candle bodies. This is a really simple method, but once you practice it, it's really useful. So I'm just gonna try and get in the bodies on the right here, and also pretty close to the wick. And so that's going to be $1.75, and I already told you those psychological 25-cent increments are another factor I'm using when drawing support and resistance levels. Okay, so this is another key spot. You can see $2 as it broke through and gained liquidity, and now it's trying to hold that again. So when I'm looking at this chart, it's not looking great to me, but this is IDEX, so that's expected. So now I'm trying to get in the accumulation of resistance here on the left and through all these bodies, while also touching on this resistance level it's faced on the right over here. And if I'm able to get that 25-cent increment, perfect, I will take it. So that's your current resistance level now, and everything below this is support. And the funny thing is, I was actually gauging all of this on resistance becoming a support. So these are all resistance levels that were broken that have become support, and this is on a 10-day chart. And now if I open this up to a 30-day, you know what, that holds up pretty well. You can see your higher levels here, and if you want to see what's key in that, you could probably do a 180 day, and it's also good to zoom in if you want to, right? You're trying to give yourself an advantage, and seeing the clearer picture is part of that too. So next key spot, pretty easy to spot it here through these bodies and the candle bodies plus these wicks over here. You're going to get another resistance level at $3. So how do you use support and resistance levels? Well, this is how you're going to be assessing your risk and reward, right, for the positions you're taking, and the entries and the starters that you're taking, how you're going to scale in. You can see here at the $2 mark, you have about 10%, a little more immediate risk, right? Like 10-15% you have right here. So if you wanted to start scaling, and I'm not saying play IDEX, but just let's use it as an example. If you wanted to start scaling in, you'd probably be looking for a chance that it bounces off $2, right, and reverses, and you have 50% upside, potentially maximum, right here, unless it booms through all this resistance. But you have some walls before you have much upside, and you have pretty easy 50% risk. But right away, you see that 50% is close. You see 50% is like an achievable upside point, and 50% risk is a bit further away. So there's a decent risk reward here, but it would take some diligent, planning, and I would actually wait on a better entry point, right? I mean, I would rather get sub $2. This is IDEX, but if we were to factor in some patterns here, let's not even think about it, but I mean, anyways, so yeah, that's a good example of getting into a closer aggregation period and seeing how that holds up on the longer time frames, and then using those longer time frames to gauge your more historic resistance levels instead of just what you're seeing in the short aggregation period. Okay. Again, I'm gonna hop into the chat after I charted that one and just see if you guys have any questions, the lucky 25 that are in here. So yeah, just let me know if you guys have any questions in the chat, and I can address them. I know it's capped out, I know. All right, so I guess that's a good question. Yeah, what studies am I using here in general? I'm using RSI, right, and volume bars at the bottom. Okay, and I have those stacked on top of each other. That's just the way I like to have it, because I like to focus on the candles and the charts. And then I'm using Bollinger Bands, which has the 20 SMA acting as the mid band here, and then I don't even know. I don't know off the top of my head exactly, but I'm just trying to use really commonly used indicators, because I'm basing a lot of my trades on trader psychology, and a lot of my technical analysis is based on what I think other people are going to do and what they're thinking. So I'm using VWAP, Bollinger Bands, RSI, volume, and that's it. Sometimes I use EMA9 instead of Bollinger Bands. I don't use MACD. That's just me. I've always found it works more like a hindsight indicator, so it's just not something that's useful for me. But if you find use in it, lots of people use that tool, so it's good to factor in. All right, so that's definitely a penny stock. So I'll just do one more example here. So I'm doing a really simple method of support and resistance. There are other methods you can do. You can angle your support and resistance levels. You can use channels of support and resistance. There's lots of different methods, but the reason I'm using this horizontal, really basic method is, again, I'm trying to use the most common methods, basing my trades on, what other people are thinking. Okay, so this is the daily chart for RTX, which we snagged right here. Beauty. But the reason I thought it was a good play is because you see a lot of historic price action at this low level, during the March crash, right? So if I were going to put like a very low support level, it would be like 48 bucks. I mean, 45 probably, but there's not a lot of price action at that point. So I'm going to try and stick to the bodies, and that's at $48. And then you're seeing a lot more price action right here in these candles. And I'm not even thinking about volume at this point. I'm just looking at the candles. So I'm trying to get the lowest point of support it was bouncing off before, it knifed on this earnings report. And that's going to be basically $56 here. Right, so when I alerted this trade, I was looking at the risk reward here, and I'm seeing, okay, it has a really key support level around 52-week lows. So it also has some support higher. Right here you can see actually there's a lot of support at $50. So even before it's going to reach this point, it has to break $50. So it fell to $52, and there's so much upside here. Once it were to break, just 10% above its current price, almost 15%, it has a lot of immediate upside all the way to, $80 plus. Okay, so you have really good risk reward here, and that's why you're using support and resistance as a visual guide to that. So your first level of resistance from this trade was going to be about $56, $57. I have it here as 57. And then your next spot, 5% up, basically, at 60. Obviously, there's a lot of historic action there. So you could just ignore this level, go straight to 60. But you can see it basically just gapped up from this entire channel. Alright, so then we're going to do our next one. So now all these resistance levels that it's broken through are going to act as support. That's why you're seeing it bounce off of 70 here, because it has price action above $70 here and a lot of it right below. So you can say that that's going to be that was another resistance level that it had to break through, which it did. So now it's bouncing off here, and this is your support level acting as. The reason I have it orange right now is because, they're not super strong support levels. Forgive me, but yeah, I don't care too much about the color. Again, it's interchangeable, but if you want me to be organized, it is good to stay organized. So basically all the red ones would be support. Maybe I'll make these top two resistance, okay? So it's broken through these, and now it's trying to hold above. All right. And now let's see how this looks when you close it down a little bit. So this is the 90-day chart, 3-month chart right here. Not sure what 270 minutes is. And 60 days. So you can see how it behaves a little better around these support and resistance levels if you're trying to get a more accurate picture or a more just a closer picture. Okay, so 20 days, really close, and then I'll pull it back to the 180-day. See this here, it was trading in this small channel for such a long time that it doesn't give you the most clear picture. That's why for a situation like this, I would just use the daily. It usually gives you the clearest picture. And it's great to see the actual movement through an entire day. And the alternative, maybe let's look at something that isn't so... I do like the 6-month chart a lot as well. And you can see I have a pattern here. So this was in Seago, which I just put on my watch list. The reason I alerted it is because there was a falling wedge right here that was consolidating towards this key support area here, and I'm sure you could probably see it better. Yeah, so yeah, see, I drew it to connect through these candle bodies here. So it was consolidating in this wedge. You can see it a little better maybe on the 30-day towards this support level. So I thought that was a pretty good entry spot just in general. And you can see it's not perfect, but it's just a general image that I think other people are possibly trading off of. Alright, so I think that is pretty good, and I want to release this so that people can watch it tonight. So let me just get through some questions here. I don't use fibs. I just do it all manually. Awesome 7, welcome. Glad you've been enjoying it. I'm using Thinkorswim for charts. You can use pretty much anything. TradingView is good, but yeah, Thinkorswim, I really like that. Catching SPY knife with puts, that requires a lot more technical analysis, looking at volume per aggregation period and patterns. So that's not something I can get into on this. Well, when I'm looking for something to swing, I was just talking about this within Seago. I'm basically looking for some strong price action, and that's going to be you're going to see some accumulation with the volume, and it's going to increase on the buy side, and you could see that if you shorten the aggregation period, you can see these volume bars down here. So you can see that it had like a high volume sell-off right here, and a pretty weak run on its earnings report. You can see it's not a lot of volume when it made this run here. So it balanced out with a lot of selling, and then it ended up accumulating with a lot more buying volume. And just these pullbacks are natural. So what I was looking for here was just signs of strength and confirmation that it's going to reverse past this and hold this support level generally, $9. It bounced really quickly off of 850, and that was a sharp fall off of an earnings report. So considering that this earnings report was a beat and it held up strongly afterwards, plus it was starting to accumulate, that's the kind of there's a lot of reward and not a lot of risk here. I mean, sure, if you're looking at the chart, it looks like it might fall down to $5, but that's not really the case if you're also looking at the accumulation here of the candle bodies. So you could easily say, there's support here at $8.25. Just basing it off all this historic price action over here. Before it has a chance to break and go to $5, it's got to break this support level first. Another indicator I like to look at when deciding if I'm going to enter a position is the Bollinger Bands. If these are wide, that represents volatility, and that comes from a strong run with a lot of volume, or it comes from a sharp drop off with a lot of volume as well. That's your volatility. I'm waiting for these to tighten up, and when they tighten up, that means that it's consolidating, and it's the tighter they get, the more chance it has to move one direction or the other. So you obviously have to combine that with your technical analysis, but once they tighten up, it's ready to make a move. So that's another indicator I'm using when looking for entries. That's a good point. I was just answering the question for what characteristics do I use to determine when to go long or to swing. So, all right. Again, I can't really go over that right now. Can I explain the wedges a little more? I'll go over that another time. Do I use a scanner to find potential stocks? Of course, that's the only way I find stocks. I'm not looking on like social media or anything. And I think I just went over Bollinger Bands just a second ago. All right, so how do I keep myself from pulling out too early? If you're afraid of missing plays, don't be. There's always another play. To keep yourself from pulling out too early, what you want to be doing is you want to start, and this is when factoring in support and resistance comes in handy, is you can plan to scale out. That's what it's called when you sell your position off in portions. So you can plan to scale out based on your resistance levels. Say you throw in $1,000. I'm sounding way too much like a gambler right now, but say you put in $1,000 in Seago, and then it hits $10, which is your first resistance level. You can sell, just to keep it easy, you can sell 1/3 there, okay? And then once it hits your next resistance level, you can decide whether you want to sell 1/3 or 2/3. Okay, so you don't have to pull out immediately all in one chunk. You can scale out through the trade. And then that also gives you the ability to average up on your current holding. If it pulls back and you want to continue swinging it, then you can average up on the next dip after scaling out for profit. All right, and I think that's going to be the last question that I'll answer, so I can get this out for you guys. I'll stop the recording here.